Imagine turning on your tap and realizing the water you depend on every day travels through infrastructure built almost 100 years ago. Across parts of the United Kingdom, millions of people rely on aqueduct systems built between the 1930s and 1950 seconds. Now one of the biggest water infrastructure upgrades in modern British history is underway. But the most fascinating part of this story is not the engineering. It's how the project is being financed. Water infrastructure across the world is aging. Pipelines, tunnels, aqueducts, and treatment systems built decades ago are approaching the end of their design life. In this case, the aqueduct system stretches for over 100 kilometers, delivering drinking water across large regions. After decades of use, parts of the system have become fragile. Leaks, maintenance challenges, and supply risks are increasing. So the solution is not a small repair, it's a major infrastructure rebuild. The project includes constructing around 50 kilometers of new tunnels designed to secure the water supply for generations. The cost? Approximately £3 billion. Before we continue, if you enjoy learning about infrastructure, finance, and how global projects are funded, please like the video and subscribe to the channel. It really helps the channel grow and allows us to keep producing more content like this. Now let's look at how the money behind this project actually works. Normally, projects like this would be funded directly by governments or utilities. But this time, something different happened. Instead of traditional public funding, the project uses a structure that brings private capital directly into essential infrastructure. Under this model, a private consortium is selected to design the project, build the infrastructure, finance construction, and deliver the project. Meanwhile, the water utility continues to operate the system once it is completed. The construction phase is expected to last about 8 years, followed by a 25-year concession period, but financing such a long-term project requires a sophisticated financial structure. The project financing totals roughly £2.5 billion. The funding structure includes several layers. First, there is a bank loan with a maturity of about 10 years, primarily used to finance construction. Then there is long-term institutional financing, stretching to around 30 years. This long-term financing is split into two main parts: inflation-linked debt, which adjusts returns with inflation, and fixed-rate debt, offering predictable long-term returns. These types of assets are highly attractive to pension funds and insurance companies. But there is another key feature. The financing package includes around £300 million of first loss protection. This acts as a credit enhancement layer, absorbing initial losses if problems occur and improving the credit profile of the project. As a result, the project can attract both commercial banks and long-term institutional investors. This deal is not just about replacing water tunnels. It could represent a new model for financing infrastructure. Around the world, governments face a growing challenge. Infrastructure built decades ago needs replacement, but rebuilding it will require trillions of dollars in investment. Public budgets alone cannot cover these costs, so the future may depend on combining public oversight with private capital. If this model proves successful, similar structures could be used for water infrastructure, energy networks, transportation systems, and climate resilience projects. Deals like this may quietly shape the next generation of global infrastructure investment. If you enjoyed this breakdown of how major infrastructure projects are financed, make sure to like this video, subscribe to the channel, and turn on notifications so you don't miss future videos. And if there is another project or financial structure you would like us to explain, let us know in the comments. Thanks for watching, and we'll see you in the next video.